Hello everyone, my name is Sunday. I welcome you all to Against FX. How you guys doing? How is the course going? Because today is the 29th of September. Guys, it's not easy. At least I kept my promise. Hallelujah. We started this last week, the last week of August. The very last week of August, we started this 1 month free course, which I promise to offer for those who wants to learn how to trade, because some people don't have the cash to pay for course, and I decided to offer this for free. And I told you guys that I'm going to be giving you a crash course 1 month. And through that period, and I promised that I was going to teach you everything you need to know about Forex trading for you to be a Forex trader. I promised I was going to give you everything. And before God and man, I have given you almost everything you need to know for you to become a better trader. All right? I've already taught you guys two strategies. One is SMC, Smart Money Concept. The other one is support and resistance strategy. Then today, I'm going to be teaching you guys demand and supply as strategy. So these three things, these three strategies, go and test them out. At the end of the day, if you are comfortable trading SMC, all right, you do your back testing, you try it out, and if you are comfortable trading that, stick to SMC. If you try out support and resistance as a strategy, back test it, use your demo, trade, back test, and then if it suits your lifestyle, stick to supply, stick to support and resistance, and leave SMC, Smart Money Concept, alone. This very one that I'm going to teach you guys right now is what we call demand and supply as a strategy. All right. So now, after today, watch this video very well, take notes, and if you now try out demand and supply, and you now discover that this suits your lifestyle, you resonate with this is better for you, then you leave the other ones. But as a trader, you must know all this. All right? You must know all this. There's pin bar strategy, there is breakout strategy, all this, there's pullback strategy, all these things, there are so many. All right? As you get advanced, you get to know all these things. After this course, if you feel you want to still continue to learn from me more and more so that I can take you to the advanced level, just keep following me. Even if you don't have money to pay, no, don't worry. Just keep following me. And if you are having any issue, let me know. Drop a message for me. I will gladly respond to you. All right? That being said, today we are going to be treating the topic I titled Demand and Supply as a Strategy. All right? So when we say demand, we are simply means buyers. I will show you some slides now so that you will understand, but I'm just breaking it down for you to understand. When we say demand, it means where buyers we always um, wait for price. When price get to that level where they have already, all right, carry out activities before, there's every likelihood that price will return to that same place, that same level. It's a zone. Demand and supply zone, sorry, zone as, as a strategy. All right, let's leave it like this. All right, let's leave it like this. All right, so, and also supply, it's a zone where sellers, they have already carried out activities before. When price now gets to that level, where sellers have carried out their activities before, once price gets to that same level, there's every likelihood that sellers will push the price back. All right. So that being said, let us display uh, our slides so that we can proceed. Demand and supply strategy. All right. In forex trading, demand and supply are the invisible forces that drive price movement. All right. Demand and supply, they are the invisible forces that drives, oh, what's good? What is this? Are you taking it back to what I've already treated? One moment, guys. Okay. Demand and supply are the invisible forces that drive price movement. Understanding them is like reading the, oh gosh. Okay. Understanding them is like reading the market habit, and it is essential for spotting high probability trade setup. Now, in a real world market, you know, there's what we call demand and supply. And when we say demand, when the demand is high, all right, the price will go up, all right? And when the supply is high, the price will go down. Now, the higher the demand, the higher the price. All right? The higher the supply, the lower the price. So get that, understand that very. What's wrong with this? My system, I think, is acting up, man. It's acting up. Okay. The higher the demand, the higher the price. the lower the demand, and the lower the demand, the higher the price. But the higher the supply, the lower the price. All right? So now, when you look at market setup, you discover that what really drives markets, be it stock market or forex market, or even a physical market, like you go to, um, for example, you just go to um, go to a shop or a market, a marketplace. What really drives the market there, the invisible forces there that drive the market is supply and demand. And when we say demand, we are simply referring to buyers, people who want to come to the market to buy. And when we say supply, all right, we are referring to sellers who brings products to the market to sell. So you can now see, for you to now understand it or to get the real understanding in a very simple terms, all right, demand is what we refer to as buyers. Supply is what we refer to as sellers. Just like when we say support and resistance, we are simply referring to buyers, support, sellers, resistance. Demand, buyers, supply, sellers. Get that into your score and let it sink. Don't let the word demand and supply throw you off balance. It simply means buyers and sellers. All right? Since you know, and I've already taught you supply, and I've already taught you um, support and resistance, demand and supply shouldn't be a big thing to you. It's what you already know. When we say supply, we are simply referring to a resistance. When we say demand, we are simply referring to a support level. But the only difference is that when we say support, we are simply referring to, when we say um, demand, we are simply referring to where price activities, where buyers activities happens, where it takes place. All right, I'm going to show you on the chart, but let us deal with this few slides that I have for you guys so that you understand it. So if you are referring to a supply zone, it's a zone where buying activities has occurred. All right, you will see an area where there is consolidation, a little consolidation before price will now start moving. That demand is the push for the market to go up. All right, you will see a very sharp and swift movement. But before that sharp and swift movement happens, those guys, buyers, will always do what? They will be offloading their um, orders, all right, like the banks, the hedge funds, the guys with the big bags of money. They cannot just use only one lot size to key in their order. What they do what we call consolidation. They make the market to consolidate. Consolidation simply means the price will go up, it will come down, it will just lock in a range. It's not really bullish, it's not bearish. All right? For a while, the market will be quiet, silent. You see a little consolidation. Then before price will now move. All right? Before price will now move swiftly with a very big candle. That means the price price action has broken out of that range. That is the demand. Now the whole area there where that consolidation happened before that push, that is the whole area is a demand area. The same thing if you flip the coin at the top or resistance level where there is a little consolidation, activities of sellers, that is the supply, all right, so the supply zone, you see a little consolidation before a sharp push of price to the downside. So that area where that little consolidation happens before that sharp push to the downside is what we refer to as supply zone. So all those areas where little consolidation happen before a sharp drop of price or a sharp push of price to the upside, in future, when price roll back to that same place, as price is coming to that same level, there is every likelihood that the price will bounce from there. All right? And the multiple times a price has come to a demand zone or a supply zone, and price will now reject it and it goes the opposite direction. If it is a demand zone, price will try to come and break to the downside, but the demand zone will hold the price and push it back up. Now, if it now gets to a supply zone, the supply zone will now hold the price as well and push it down. Now, the multiple times the price will test those zones now makes that zone weaker. All right? That is one secret people don't know. If a zone is tested multiple times, it now makes that zone weaker. All right? That there is every likelihood that as price is coming back again to that level, that zone, it will break it. Now, if you want to really be trading as a smart trader, a zone that has not been tested is a very fertile zone. Price has not come to retest it. It's a very, very, very fertile zone. That is what a very high probability when price action is coming back to retest it. If you're able to spot it, that okay, this zone is a supply zone or a demand zone where price consolidated and now pushed to the upside. Once price action is coming back to retest that level, that zone, 95% guarantee that price will bounce, because breaking out of that range is now coming back to refill the order left behind. It will now come back to that same place. There is every likelihood, 95%, I guarantee you guys, 95% sure that it will bounce and it will turn to where the price is coming from. So though if you are able to spot all those high probability level, if you're able to spot all those levels like that, that is a very high probability trade setup for you. All right. But a level that has been tested more than multiple times, there's every likelihood that when price is coming back again, it can break below, it can break through it. All right. But once you see the one that just first break out, and when it's coming back, there's every assurance, like 95%. All right. Assurance that as price gets there to retest, is going to bounce. So that being said, let's proceed. What is demand and supply in forex? Demand, when traders want to buy a currency pair, demand increases, right? This pushes price to the upside. Demand simply means when traders want to buy a currency pair. And what happened? The demand, the need will now increase. And what will now happen? It will now cause price to go up. Let's say, for example, liter of fuel in Nigeria, I don't know how much is it now. Let's say, for example, liter of fuel, 1,000 naira per liter. Then all of a sudden, they now reduce the price to 500 from 1,000 to 500. There will be queue, all right? Because a lot of people want to buy. In as much as some people want to buy, some will come with the mind of buying to store. At the end of the day, they will now force the price to go up. They will drive the price because there will be queue. There will be demand. Demand will increase. So there will be queue. By so doing, the price will go up. So what is now supply? Supply is when traders want to sell a currency pair. Supply increases. This pushes price down. You understand? It's a very simple thing. I want you guys to follow it so that you understand it. All right? You will understand it. I just want you guys to understand it. Note the balance or imbalance. That reminds me, I've not taught you guys um, fair value gap. Yeah, I'm going to rush. Tomorrow is 30th. Oh man, the month is gone. But I'm going to rush so that I will get it, so that you know what balance, imbalance, fair value gap is all about when it comes to the market. So note the balance or imbalance between buyers and sellers creates price zones where reversals or breakouts often happen. I've already run you guys through all these things even before uh, getting to display. The key concept now, demand zone, a price area where buying pressure is strong enough to push price higher. All right? A demand is a zone. All right? It's a zone. Like I told you, if banks want to, if they step into the market, they want to push the market, or uh, hedge funds, all those financial institutions, big boys with big bag of money, if they want to play, if they want to come into the market to push price, they are the ones that has the power to push price. If they come, we call them violence. Once they step into the market, all right, there is no way they can, just like you now, you and I, we don't have all those kind of money. All right. If you want to place an order now, our order uh will just go through immediately. All right, because of the lot size. But those financial institutions, they use millions, billions of dollars to, when they want to come into the market, they come into the market with millions of dollars, big money. So they cannot just use it on one lot size. It's not possible. So what they do, if their target is to go up, they will first of all be bringing the price down a little, push it down. As the price is coming up, they will first push money to push the price down. That's why you hear some people who say there's manipulation in the forex market. It's no manipulation. Even if you call it manipulation, it's okay. But they are doing that to enable them to enable them offload their orders. Because the money is too much, they cannot just offload their order once and it fly. No, it's not possible. So if they are going up because they have a particular price that they want to buy or sell. So what would they do? They will if they want to go up, they will first of all drag, pushing money to bring the price down. Then before the price will now get to that same level they want to buy, they actually want to take off, they will now be offloading their orders as the price is coming up, offloading their order. Then once you now get to that level of price they want to take off from, they will just hit the tail and it will start flying. And that is the secret when we know that the violence are in the market. The real guys, financial bodies, they are in the market. When you see that move, a very massive candle like this, all right? So before that kind of move happen, there will be a little consolidation, all right? It's a price area where buying pressure, you see, they will just be buying, pushing the price up and down. Then before they will now push it to where they want it to go. And you now see, if you're a smart person, you just jump on it and you just fly with them. So it's like that. So supply zone, a price area where selling pressure is strong enough to push price lower. Think of it as a resistance level. Then demand zone, a price area where buying pressure is strong enough to push price higher. Think of it as a support level. Guys, I have given you everything you need to need. Everything you need. If you are struggling with this thing, it then means that you did not really get the concept. You need to rewatch the video very well. For any topic you are struggling with this my explanation, that means you need to rewatch that video more than 2 times for you to really grab the concept. Now, imbalance, when demand outweighs supply or vice versa, price move rapidly in one direction. Now, imbalance simply means when demand or supply, now when demand outweighs supply or when supply outweighs demand. When you say demand outweighs supply, that means it's coming from a demand zone going up, bullish. When a supply outweighs demand, it's coming from a supply zone going bearish. That means buyers outweighs sellers or sellers outweighs buyers. Those are the things, the activities that happens in the forex market. We have two people, just two, buyers and sellers. I'm telling you, there's nothing there. I've already given you this thing. Anywhere you go is like this. So when we say imbalance, we are simply saying when demand outweighs supply or vice versa, price move rapidly in one direction. If price takes off from a demand zone, at that point, there will be a battle between sellers and buyers. Now, when buyers now outweigh the sellers, that means demand has outweighs supply. There will be a rapid movement. There will be a price move rapidly in one direction. All right? Like I told you guys, the movement of the price when it takes off from demand, that is when you will know that the big boys are in the market. All right? Now, when we say equilibrium, when supply and demand are balanced, equal, that is, price consolidate or move sideways. All right? Before demand happens or before supply happens, this supply and demand will be equal. They will be balanced. And that balancing of price will create consolidation, or when price is moving sideways. At that point, nobody is leading, but something is going on. Just watch out. After a while, there will be a breakout. So that breakout, if it breaks to the upside, you now know that buyers are in charge. If it breaks to the downside, you now know that sellers are in charge. So at that point, we say demand. Or if it breaks to the downside, that reference point is what we refer to as supply. As simple as that. Why it matters for traders: helps identify entry and exit point with precision. All right? With precision. When you, during the period of that consolidation, all right? During the period of that consolidation, the equilibrium, where price will just be going one side or consolidating, now what will happen? There will be a breakout. All right? There will be a breakout. But you've got to be careful, because sometimes there will be a false breakout. Like I told you guys, people will say it's a manipulation. But if buyers, they want to now move, there could be a candle that will push to the downside. The buyers will first of all push in money to push the price a little down. Then as the price is coming up, because once they push it down, you see a massive rejection, a pin bar. It now shows that there is a buying pressure. The price wants to fly. It wants to go up. Those are the signs. That is why I've already given you guys the important candlestick you should watch out for as a trader. Once you see a pin bar, a bearish candle that was full just now as it was coming down, it now started chopping off, leaving only wick. Then once that candle close, you will see a very massive candle. If once it comes up like this, it will just boom, it will just move. All right. So once you see a pin by a clear pin bar at a very strategic level, support level, or a resistance level, I'm telling you, that signifies a very massive pressure, buying pressure or selling pressure. Because once it closes, you will see bullish engulfing candle or a bearish engulfing candle if it's coming from the top. All right? So at that point, once you see that pin bar is rejecting very fast, just get ready for your entry. All right? Once you see the next candle appears a bullish engulfing candle, just enter. Then you put your stop loss below the pin bar or below the structure. So it helps you to identify entry and exit point with precision. Or if you don't want to enter like that, allow it to fly. Let it go. It will come back to retest that level. Once it comes back to retest that level, the zone, there's every likelihood, 95%, that the price will bounce from there. Once it gets to that same level, just enter. All right. But before you enter, you have to wait for confirmation. Like I've always told you guys, don't trade blindly. You have to wait for confirmation. As it gets to that point, that same zone, look out for rejection. Once you start seeing rejection, that will not tell you, buyers are in the market because they are sellers pushing the price to that downside. Once it now gets to a demand level, a demand zone, then you now see buyers coming into the market with full force. That will now create a pin bar. That is buying pressure. You just know that, okay, this is a sign that buyers have stepped in, and before you know it, you just see a bullish candle appears, and you just get it. As simple as that. Reviews market sentiment and potential reversals. Once you see you are able to identify demand and supply zones, all those areas, this is how you now use it as a strategy. Once you now identify the demand and supply zone, just wait for price to come back to that level. Anytime price get to that level, just use your triangle to mark that level. Anytime price trade back to that level, that is a setup for you. It's either a trade to a support, a demand level, or a trade to a resistance level. Once you trade to a resistance level and you see that is a demand zone or a supply zone where buying or selling activities has occurred, where consolidation happens before a breakout. Once price come back to revisit that same zone, that is your setup. That is how to trade it as a strategy. So now, if you are now trading it as a strategy, all you will now be looking for, do your analysis, mark all where demand and supply zones are. Identify them, all right? Identify them, look for where consolidation happened and there was a breakout. You go, look for where consolidation happened and there was a breakout. Once you are able to identify all those points, pick your angle to shade that place and wait for price to revisit that same zone. All right? Once price revisit the same zone, then you just need to wait for confirmation to show that the level will hold. Once it gives you that sign that the level will hold, enter without any hesitation. That is it. So, works well with price action strategy. No indicator needed. Once you are trading support and resistance and demand and supply, you don't need any indicator. All you just need to rely on is price in action. You have identified that that area is a demand and supply zone where price activities, buying activities or selling activities occur. There was a consolidation before a breakout. Wait for price to return back to that same level. You don't need indicator to do that. As price is revisiting that level, that zone, you will know, you will see it. All right? If you are not the type that sit in front of your computer, haven't done your analysis and all that, you have marked the area, you set your alert anywhere you are. Once price trades to that zone, your phone, you get alert. Then you now open and see the structure. Then once you start seeing a hesitation on that zone, then you shoot your shot. Empowers traders to follow the smart money institutions that move market. I've already explained to you guys. I don't need to say much. When you see all those things, you know that, okay, when that happens, you know well that the institutions, they are in the market. Once you just see that the market is calm, and you just see price moving up and down, consolidating, going sideways, the next thing you should be preparing for is a breakout. And once there's a breakout and the price is accepted, whichever direction, once the price is accepted, it will just fly. Tools needed to spot zones, support and resistance level, order blocks, volume spikes, Fibonacci retracements, true, candlestick patterns, e.g. like engulfing or pin bar that I've just told you guys. Pin bars or engulfing candle can be bullish engulfing, it can be bearish engulfing, depending on where the price is breaking out to. All right. Now, what was a support and resistance level? What you need for you to be able to identify or spot those zones, right? Support and resistance, like I told you, support is what we call demand. Resistance is supply. All right? Like I said, support is where buyers wait for price, and as price gets to that level, they will enter the market to push the price to the upside. While resistance is a level where sellers will wait for price action. And when price action get to that level, they will step in and push the price to the downside. All right? What happens If they now step in and they are making an attempt to push price to the downside, and the buyers, they are more than the sellers, what will happen? They will break that resistance. Once they break the resistance, then the sellers will now move to the next level. They will go and wait for price. As price get to that level, they will try again until they're able to take power from buyers. It's like that. And it's the reverse again. If you flip the coin, as the sellers are from the resistance level, as they are pushing the price down to the downside, once they get to the support level, buyers will enter to take power from them so that they can take the price higher. All right? But what happens if the sellers are more than the buyer? They will push the price below that level. What will now happen? Buyers will now go down again to the next support level and wait for sellers. The same thing happens when we use the word demand, that is support level, and resistance, which is a supply level. All right? So you can use support and resistance to even spot all these zones. Because support and resistance, they are levels where buyers and sellers have already carried out activities. So if price return back to a resistance that is very strong, if price is coming back to a resistance that is very strong, sellers will push that price down. And if price is coming back to a support level that is very strong, buyers will push the price up. But sometimes they break it. That is why we'll tell you guys, you people are new into the system. All right? Go start learning your trade from the higher time frame. As a matter of fact, don't go below 1 hour. If you cannot trade, if you cannot have the patience to wait for a setup on 4 hour time frame, scale down to 1 hour, but don't go below 1 hour. I beg you. Because the noise is too much. Below 1 hour, the noise is too much, and you will not get real setup. Most times, all those, their support and resistance on 15 minutes, 5 minutes, 2 minutes, 1 minute, they break easily. All these they are not strong. But once you are able to single out a strong support level on the higher time frame, like daily, or you mark your weekly, the resistance or a demand zone on weekly, then you now scale down to your daily, fine-tune it, then scale down to 4 hours and wait for price. Let price return to that support level and see if the price will not react. Except that level is meant to be broken. That means there is a very massive push to the downside. That is the only time you will see a support level being broken or a resistance level being broken. If the trend is very strong and is pushing to the upside, there is a resistance cannot stop it. It will push and create another high. It's like that. It's like that. So another way you can also spot the zone is through order block. Because on the higher time frame, when you like I've already taught you guys how to trade smart money concept. All right. The smart money concept, you mark your break of structure. Then for your break of structure, you look for the origin that caused the break of structure. All right, that origin that caused that push to the upside might just be a bullish candle or a bearish candle, as the case may be, but it has to be the last candle before a big push to the upside. All right? Don't say because it's a bullish trend, you are expected to see a bearish candle. You are expected to mark the last bearish candle. Sometimes, before that bearish candle closed, it would have turned to a bullish candle. But that bullish candle will now be the last candle before a massive push to the upside. How do you identify another block? You identify another block. Another block is a small candle before a big, massive candle, a big one. So usually a small candle before that push to the upside that now caused the break of structure. So what you will now do, you just put your angle tool, shade it, then you now start refining it down. All right. Make sure you mark your other block from a higher time frame. All right. Then you now start refining it down. If you scale down from weekly to, let's say you mark your other block for weekly, you now scale down to daily. All right. When you scale down to daily, you read the structure. Read the structure. Also mark the break of structure on that daily time frame. All right. It might now be okay. If you now see a very another break of structure, all right. If you now see another break of structure within that uh, daily time frame that you now mark, then you now read, because the weekly will now be too long, will now be too far, rather, will now be too far. All right. I will show you guys so that you will understand. Let me just show you guys so that you understand better. Okay. Now, what I was explaining is that when you say, okay, weekly, you say, okay, weekly, right? This is weekly. If you say this one here, for example, you know, say, okay, this very one, this is the last candle. But it was this, after this is when this guy now push to the upside, right? If you now mark this very one here, for example, if you mark this very one here like this, what will happen is if you now scale down to daily, you now see it here now. All right? You now see all this place is just that one candle from here like this to this one. All right? Now you will now start refining your own, refining based on your entry. All right, based on your entry time frame. If you now scale down like this, you know, say, okay, let me scale to 4 hours. You scale down to 4 hours, you see what happened. You now discover that this 4 hour has its own structure. Now you have to now read this structure. All right? You have to now read this structure because this one here is too far. You have to now read the structure. All right? Reading the structure, you now discover that there is This guy here, you see this guy here, this place, after this break of structure, see, this one is a break of structure. I don't want to go too far to the downside. I've already taught you guys break of structure and all that, so I don't want to start doing all these things tonight. Then another one, break of structure. This is the last break of structure. Now, look at this. Price went like this. It came back. When it interacted with this level, what happened? It pushed. There was a reaction, and it started going. All right? You can now see. This is what we are, this is what I meant by when you want to, when you single out another block from a higher time frame like weekly, it might be too far. Well, it's valid, but it's too far. All right? It's too far in the sense that if you now want to wait until price get to this place, it's too far. So you have to read the structure. Your entry time frame, you now read the structure. That is when you now see the current uh, activity that is going on, and you will now look for an opportunity right there. All right? This is a break of structure, this is a break of, so all these sides are too far. Just one, two. Take like two support level, this is one support level, this is another support level. Just two. All right? Like this. You mark there, then you now wait, you shade it with your this tool like this, shade it and wait for price to return back to that same level. And once it gets here, you wait and see if there will be a reaction. Then that reaction is what you will now wait for. But by the time you now get a confirmation, then you enter the trade. That is what we are saying. All right, guys. So let's go on so that volume spike. Then when we talk about volume spike, you now talk of after the consolidation, you will see a push to the upside. All right. Then Fibonacci retracement, you can use Fibonacci retracement to um, spot a demand zone. All right, you know, you have a range, all right, from support to a resistance. All right, so when you plot your Fibonacci retracement tool, you know where all those levels are. So you wait for price to get there, then you can now take action. Like candlestick patterns, e.g. like engulfing candle or pin bar candle. The engulfing candle simply tells you that there is a momentum, all right? There is a momentum, all right? If it's bearish, you know that, okay, this momentum is very high. Sellers are in control, total control. You now see a very big candle will now engulf the previous candle. Or you see a pin bar, once it gets to a support level, a resistance level, in this case now we're talking about demand and supply. So once it gets to that demand zone, it will start rejecting. That is a sign of what? Buying pressure. Or if it get to a supply zone, it will now start rejecting. It's a sign of selling pressure. So, example, if Euro USD drops to a level where buyers previously stepped in and push price up, that level becomes a demand zone. All right? If Euro USD drops to a level, if it drops to a level where they previously stepped in and push price up, that level becomes a demand zone. Now, if price returns there, traders anticipate another bounce. It is something that we know that once price return to that place to retest that place, it will surely bounce, and plan their trades accordingly. Once you start seeing that it's coming, there is approaching, all you need to be doing as a trader, where you will enter, your lot size, your risk management, you start getting ready. You start planning your trade. All right. So how to identify demand zone by areas? Number one, look for strong bullish moves. Find area where price move up rapidly with large candles and little to no pullback. Where areas where price move up rapidly, all right? These zones suggest buyers were aggressive. There was a very high momentum at that moment. Then the second one is you mark the base of the move, where the base, where the move started, mark it. All right. Identify the last consolidation or sideways movement before the strong rally. All these things, I'm just making it so that you understand it. As you read it, you understand. That is why I'm taking my time to write all those things down for you to consume. All right? You identify the last consolidation or sideways move before the strong rally. When we say rally, we are saying after that consolidation or sideways move, you now see a very push to the upside and price will now start going. Then we say it rallies. And so that rally meaning momentum. All right. This is your demand zone where buyers previously step in. Use candlestick clues as well. Bullish engulfing, pin bars, or long wicks at the bottom often signals demand, buying pressure. How to identify supply zone, that is sell area. I don't know how I'm going to explain this so that it will sink. Number one, look for strong bearish moves. All right. Spot areas where price drop sharply with large bearish candles. All right. Once you see that, you just know. Once you open your chart and just look at it, you know, okay, this is supply zone, this is a demand zone. Because why? They are telling me look for strong bearish move where sellers really traded, where they push the price. All right. The demand zone where the buyer really traded and where they were able to push the price up rapidly. You see, this zone suggests sellers were in control. Now you mark the origin of the drop. Find the last pause or range before the price fell, before it started pushing to the ground, the downside. This is your supply zone where sellers previously dominated. All right. Watch for rejections like pin bars, bearish engulfing, shooting stars, or long upper wicks often confirm supply. Once you see a very long upper wick, all right, that is a sign that there is supply. Buyers are in need. Tips for drawing supply. How you draw it? Use the body and wick of the candles in the base area. Zones are not exact lines. Think of them as area or a range because there's always a consolidation before a breakout, and that is a push. All right. The more times price react to a zone, the weaker it becomes. I've said this thing. If you spot a zone that price just broke out from, and you did not take a trade, there is still an opportunity. The opportunity might not happen that day. It might not happen the next hour. It might not happen 2 days. It might not happen sometime. It might not happen the next 3 days. In fact, in a week. But anytime price return back to retest that zone, if it just breaks out and it has not come to retest that zone, wait for price to come to that level. That is a very good opportunity for you. But if price has returned to that level like multiple times, all right, and you now see price coming down, coming back to that same place again, that place, it has become weak because the more times price retest a zone, it makes it weaker. But most people don't know. Most people don't know. All right? That means there's every tendency at that point that it can break. I'm just telling you for free. You're not paying me. Go and do your research and you understand. Fresh zones untouched since formation are often stronger. End of discussion. Bonus, combine with time frame. Now, use higher time frame like daily or weekly to spot major zones. I already told you guys I don't want to develop headache for this thing again. Refine entries on lower time frame like 1 hour, 4 hours for your precision entry. Basta. End of discussion. If at the end of the day you watch this video, you don't know how to trade demand and supply. You don't know what demand and supply is. If you open your chart, you don't know what demand and supply, you cannot identify demand and supply. You have to go back and start all over again and be watching the videos. Start from the beginning. As in from the beginning, if you open my YouTube channel Against FX, all right, Against FX. First, you subscribe. Then the next thing you need to do is to activate that bell sign so that in future, if I have any update and I release any video, all right, for advanced trading, you will even be the first to be notified. And apart from that, go to one moment. Excuse me. You go to on the playlist, you go to beginners free course. All right, that is the playlist. Beginner free course. All the videos that are there is what I've released since we started this 1 month free 1 month crash course on how to become a trader, a forex trader. And all these things that I've taught you guys here and now is everything about trading that you need to know. Then once you have already grabbed the concept, you have understood everything. The next thing is you learn on the job. As you trade, you grab more experience. As you trade, you grab more experience. That is it, guys. So do well to subscribe to my channel and don't just take this very serious. All right. If you want to learn something, you learn it. All right. If you don't want to learn, you don't even start. Trading is not something that is a skill set. Just somebody who just wake up and say he wants to become a doctor. Is it easy? You have to go to school. After years, you have to go and do your housemanship, do all those things. Then you now start practicing. And as you practice, you gain more knowledge. So that is how. Or you want to go and you want to become a civil engineer, or you want to become an accountant. is the same. So you must go through process. All right. So you want to be a trader, a forex trader, focus on the process. Focus on the process. Focus on the process, not the money. Remember, trading is a skill set. If you know it, if you know it, and you are able to raise capital to fund your account, and you know how to apply risk management properly, you are okay for the rest of your life. I'm telling you. Even if you can be doing any other job and be doing it, that will now be a double income for you. All right. So when we talk about supply and we talk about demand, we'll say supply and we'll say demand, right? I will just give you a simple example, very simple. This place is what? A supply zone. This point here is a demand zone. Price, once price get to this level, as a matter of fact, look at it. When this candle push up to this level, I'm on this trade, guys. Let me not lie. I'm on this trade. Something around, say, 2 o'clock. No, about 2:30. This trade got to this point, and it now started pulling back. If you don't know how to trade now, you'll be worried. You will not jump out. This is what we call pullback. This is a daily pullback. All right? This is a daily pullback. Before it was up to this level. You understand? It's reacting based on this zone. Reacting based on these zones. Because there are so many others at this supply zone here. All right? But for this level here, to pull back to this level and he rejected from here, this demand here, this one caused the demand and is going up. Because he responded and is going up, he must break this level. Yes. Because why? It's bullish. This is a bullish market. This is a bullish market. And if you scale down to 4 hours, guys, if you scale down to 4 hours, look at it. All right? Look at it. You see, it came here, it dropped. It created a demand here. And it created a supply, rather. It created a supply here. And price retraced up to this level. And this level now held. All right? Price now started pushing to the upside. All right? This resistance is broken. This resistance is broken. It's remaining this. Do you understand? So the idea is this one is just a pullback from this push. This is just a pullback. Now, once once it start pushing now, it's going to break this resistance zone or resistance level, or you call it a demand zone. You see, after this consolidation price now drop. After this consolidation price drops. After this little consolidation price drop, what is here that you don't know? After this consolidation price went up. You see, after all this consolidation price pushed to the upside. All right. Or is it this one you don't know? 1, 2, 3, 4, 5, then price drop. As simple as that. Or is it this? After all this move like this, consolidation price now started pushing to the upside. All these things are very simple to identify. Like I told you, demand and demand is the same thing as a support level. Don't get yourself confused. Demand is the same thing as support level. If somebody even tell you, "Oh, don't know, don't mind," demand is the same thing as support level. Supply is the same thing as resistance level. So don't get yourself confused for just no reason. All right? Once price get to this level now, there will be a reaction. There will be a reaction. This is where my TP is. This level. This level. He moved up to this point. He did not get to this level, but he now started retracing. No worry. He only retraced to now gather more momentum to come and fight these people, to fight these sellers that are here. So it's like that. So what is now the issue? I'm just waiting patiently until he gets got this point here. This is where the battle is. If he breaks, then he will give us a new high. But if he rejects from here, then the supply will send the price back. It's like that. But it has to get to this level. This place he now gets to, then he started retracing. This is just a pullback. It has to move to get to this level. Once he gets here, once he touches this level, there will be a reaction. All right. So it's like that because why? This point here is a supply zone. And apart from being a supply zone, is a resistance zone. And apart from being a resistance zone, guys, this is what we call order block. This guy here is the last candlestick before this push to the downside. All you need to do, mark from the top to the down like this, drag it and wait. Immediately this guy dropped like this, you wait patiently until price gets here. It's like that. If he holds, then you see a massive drop. Price will go down. But if he breaks, it's going to give us a new high. All right? But understand something. Once you understand structure, you should understand that this is a bullish market. This is a bullish market. It's a bullish market. All right? It's a bullish market. Because we are bullish, there is every likelihood that this place will break and price will give us a new high price. All right? So, guys, as far as I'm concerned, I think we are done with this. Do well to subscribe to my channel, Against FX, please. And share my video, guys. Tell people, those people who don't have money to pay for course, they should go come and learn for free. All right? They should come and learn for free. As simple as that. The only thing I need from you is for you to subscribe. So many people are watching my video. Some don't even want to subscribe, but there's no problem. But please try and subscribe. It's just a click. One click, you are there. It doesn't cost you anything. All right. Thank you so much. And at this point, I will say thank you. I see you again in the next episode.